So guys, welcome back to Wise Wealth. We've got a great guest today. We've got Rebecca Cretney, who is a wealth manager at Nedbank Private Wealth. Super excited to get involved in this conversation. We're going to be discussing what does it take to be a successful investor and how can you implement that into your journey. So stay tuned. Absolute amazing conversation coming up. Enjoy. Don't forget to absolutely nuke the like button and subscribe button. Enjoy, guys. Okay, so if you can start off just by introducing yourself.
Yeah, so my name is Rebecca Cretney. I'm an investment counsellor with Nedbank Private Wealth. I moved to the Isle of Man from Barcelona, Spain, when I was in my early 20s in order to pursue a degree in business studies. And I've been with Nedbank Private Wealth since 2002 now. So time has flown. A long time here.
That's a strange move, isn't it? Going from Barcelona to Isle of Man to pursue your education.
It was actually laziness that brought me here, to be perfectly frank. I was studying English at the University of Barcelona, and in Spain, you very much work at what you study. So if you study English, you work as an English teacher. And I did an exchange year in Frankfurt. And I was teaching, whilst I was doing an exchange year in Frankfurt, I was also teaching business English to sort of CEOs of large corporations, such as Deutsche Bank, etc. And I realized that I was more interested in what they were doing than in what I was doing. So I was very keen to talk to them about markets, to talk to them about finances. And so when I went back to Barcelona after my exchange year, I thought, wow, I'm doing the wrong thing. So I had to start again in my mind, and I had to do business studies or economics or something like that. And so in Spain, that takes 5 years full time. In the Isle of Man, it takes 3 years full time, and full time means 7 hours in a classroom a week, whereas in Spain it's 7 hours in a classroom a day. So it was absolute laziness that brought me to the Isle of Man.
That's an interesting aspect, I suppose. So today we're going to be talking about what does it take to be a successful investor. So I suppose what's your current role at Nedbank?
I advise clients on their wealth. I help our private bankers to formulate a plan in order to achieve clients' goals. And I provide technical assistance for more complex scenarios or for more complex market circumstances. So I provide technical assistance to our private bankers, essentially.
Okay, amazing. So yeah, today we're going to be talking about what does it take to be a successful investor. Where should we get started on that?
Well, first of all, they should probably involve someone who's been accredited by one of your courses. No, in all seriousness, I think that there are two things that we tend to underestimate in terms of being a successful investor, especially for people who don't have as much financial acumen, perhaps. And first is detailed awareness of who you yourself are. And that, it seems very obvious and very logical, but I think you'd be amazed by how few people actually know who they are as a person. At least that is my experience. We don't tend to know what is important to us and why it's important to us. And so it's impossible really to formulate a successful plan without knowing ourselves and without knowing what our biases are, what will make us tick. And the second thing that's important is to have a good team of professionals surrounding you, because you can't know everything. about about markets. You can't know everything about tax. You can't know everything about currency. So you need a team of professionals around you.
I agree. That's a good opener, I suppose, on where people understand themselves. And I suppose in your experience, how would that change the advice or opinion that you give those people? So based on understanding yourself, what sort of tick boxes are you looking for, I suppose, from the customer?
So on understanding ourselves, there are two aspects. First, we need to understand ourselves psychologically and emotionally. So we need to understand what is important to us and why. I tend to find that when I ask clients what's important to them and why, the answer is normally surrounds kids, surrounds family. And the why is just because it's expected. But then people's lives don't tend to reflect that. So, if you ask someone what's important to you, and they say, well, it's my kids, and they say, well, so you spend a lot of time with your kids. The answer tends to be no. So then it's sort of digging to understand, to really get a picture of the person that you are dealing with, in order that you can not only help them to fulfill their wealth ambitions, but also that you can be a sounding board so that they can express their opinions, and so that they can actually walk away asking themselves some fairly fundamental questions about life, which you probably don't walk into a wealth manager expecting to be asked, in all fairness. But it's impossible to formulate a plan unless you know two things. First is where the person currently is, financially, emotionally, what their values are, etc. And second, where the person's going. So you have to know both things in order to be able to formulate that plan. If not, you're a bit stuffed. And most wealth advisors, I tend to find, start a conversation talking about their performance and their price, which is completely skewed to the wealth manager's agenda instead of to their client's agenda. So understanding who the person is and why will help you build a plan to be able to deliver that person's vision of a financial future, and to give them success in life, essentially, and contribute to their overall happiness. And also understanding perhaps what their beliefs about money are. So what their inner scripts are, for lack of a better word. Because we're all pretty much born with a relationship with money, whether we like it or not. We're all born into either poverty or wealth. The amount of money that our parents had determines whether we're born in a hospital even or not. And so arguably the first relationship that we will ever have is a relationship with money. And so this interplay, this relationship with money, starts to form neural pathways in our brain, and it tells us what we should believe about money. Some people believe that they are worth it, and so that they should spend, because if they don't spend, then that takes away from their self-worth. Whereas other people tend to believe that they're actually not worth it, and that they should be very frugal with money, or perhaps even give it away. So really understanding who we are is a foundational piece in order to be able to get to that end destination of where we want to get to. And we can't understand one without the other.
That is amazing. Do you find the clients quite open about that discussion?
No. No. We actually have to preempt the conversation. So because clients are typically arrive at our offices and expect to be told, well, you've got X million to invest, and so this is therefore what you should do. And they expect to sit there passively and listen to someone explain why they are the best at managing money. What they don't expect is to sit down and listen to someone asking them questions surrounding themselves, their values, their aspirations, their goals. And so we have to preempt it by saying that, we are going to primarily listen in the first conversation and in the first series of conversations that we have. So I think it's quite important to frame that so that people have time to actually think about who you are. I mean, it's quite a hard question, isn't it? Have you ever been asked that type of question?
Have I ever been asked that type of question of what's my beliefs in money and so on and so forth? Well, I think we briefly discussed it with me, you, and Sid, didn't we, when I was there? But other than that, I don't think anybody's asked me that. I think when we was talking just before this about Adrian, our mindset coach at Samuel & Co. He covers it quite heavily, talking about it, about how you perceive money, how where it stemmed from your family roots, and the importance of understanding that, because that's how it's going to reflect emotionally when you're investing in the markets. So I think for me, I've had that grained into me quite for some time to think about it. And it's interesting. I think, like I said, I didn't come from family wealth. I would say I was self-made. And I think, if anything, initially when I had that money, I was the first category I was talking about spend, and buy all these nice luxury things. But then afterwards, when I started my family, it was, how do I now look after that? How do I grow that? How do I make that sort of generational wealth? So I suppose that's how I thought about it from that aspect. Whereas I think not a lot of people, they didn't have that. I don't think a lot of people had that exposure to either a mindset coach or someone like yourself who's asking that question initially. And therefore they've already got their set agenda of, it's not something that they think about. It's just, like you're saying, what percentage return am I going to get? What's your fees? Where do I start?
Yeah, and I find it quite amazing, actually, that you do have a mindset coach, because it shows that you actually pay attention to that right-hand side of the brain, which most of us tend to minimize, because we think that, I don't know, perhaps there's a perception that it isn't cool to talk about emotional things, emotionally related matters. And so we tend to focus our attention on technical aspects and ignore the right-hand side of the brain. But we're all emotional beings, and we can't function without the right-hand side of the brain. In fact, every single decision that we make is filtered first, and your mindset coach will tell you that it's filtered first through our emotional side of the brain, and it then filters in to the logical side. And so really having an in-depth understanding of who we are can't be minimized. The importance of that, it really can't be minimized, because if we know what tendencies we have as investors, if we know deeply what our goals are and why we care about the things that we care about, and if we have a very carefully formulated plan in order to try and achieve those goals, then our chances of success are going to be infinitely higher than if we really have no idea of who we are, but we just know that we want the highest return possible within the shortest possible timeframes, without really knowing why we're doing it.
Yeah, and I suppose that brings us on to, I suppose, emotional investing in sort of terminology. Do you find that people then sort of self-sabotage their own investment goals through not understanding that?
Yeah, that's right. Because of that fear taking over, the fear of market losses, they say, is akin to the fear of death. And so our primeval mind takes over, and it's fight or flight, essentially. And so the sensation of financial loss is pretty much close to the sensation of being scared for your life. Whereas the euphoria of a gain doesn't quite reach those same highs, does it? So I think it was Vanguard that did a study in which they were claiming that the average investor costs themselves 2% per annum on an annual, year in, year out, through through not understanding their own emotions, essentially. So I mean, that is a heck of a lot of money.
When you compound that as well.
Exactly. When you compound it, and when you think that is the average investor, and that within that there will be people that are quite knowledgeable about financial markets, are able to make their own decisions, etc. You can see how we can't operate in isolation, and you can see the value of financial advice at play, and the value of having a team of people that are actually surrounding you in order to support those financial goals that you may have.
Yeah, no, I agree. So I suppose if emotional investing, people sort of self-sabotaging, they're causing themselves losses by not knowing that. What sort of steps after that? Let's say that they've worked that out. How do they then sort of formulate a plan to move forward?
Okay, so if the first step that I would normally advocate, in order to really ascertain that you know what your goals are, is to ask yourself 3 questions. And the 3 questions are questions formulated by George Kinder. I don't know if you'll have heard of him, but he's probably one of the most well-known life planners, as opposed to wealth planners that there is. And they really hone in on what's important. So I'm going to ask you these questions, and perhaps your audience can imagine the questions being asked of themselves.
Yeah, sure.
So the first is, imagine that you now have accumulated all of the wealth that you will ever need to lead a happy life, and that you don't actually have to work anymore or accumulate anymore to cater for life's basics. How would that change the knowledge of that? How would it change the way that you choose to live your life today?
Okay, from an investment point of view, or from a day-to-day life point of view?
From a day-to-day life point of view.
See, I would say that I actually live that life.
Okay.
Genuinely, I do. I'm a very simple guy. When I moved here, I felt that that was me taking that step. I suppose I don't think anything would change in my life now as it is. I'd probably do a little bit more construction and some more projects around that size to keep busy. So I would say that I feel like I was at that stage. I don't think that's a good example for everybody else, but I would say that I'm pretty happy. I mean, last night I was on my tractor cutting my lawn at 9 o'clock at night and took a photo of me sat there looking at the sunset. I mean, I would say, that was me. I was pretty happy with that. I was pretty content with that. I don't think I would change. I don't think I would change anything in that side. I'd probably say that maybe mitigating risk from an investment point of view, mitigating risk and going more long term than more aggressive and short term, which I feel like that's what I took to get to where I am. Yeah,
but you already have changed something pretty significant as a result of that knowledge. So you've changed where you live. So you've taken that step, probably because you are cognizant of, of what you want, of what your goals are, of what you've gone through that introspective process already. So you made the decision to up sticks and move to a rock in the middle of the Irish Sea.
Yeah, I agree.
As the result of knowing your goals. Okay. So the second question is, imagine that you went to the doctor.
Yeah.
And the doctor said to you, Sam, unfortunately, I've got bad news for you. You've got a terminal illness. And you have between 5 and 10 years left to live. You won't experience any physical pain, but you won't live past those 10 years.
Yeah.
Would that change the way you live in any shape or form?
From a family point of view, I don't think so. I'm very aware. So I listen to a lot of podcasts. So I'm very aware that, if you see your family, say, for example, twice a year and they're in their 80s and, the average lifespan's 85, you can work out you're only actually going to see those people 10 more times. So yeah. I sort of took that aspect and was like, well, you need to spend more time with the wider family to enjoy that time. So it's not 10 times, but maybe it's 50 times because, that's getting less and less and less. From my own perspective, I suppose, from a will perspective, I'd probably make sure that was fine. If I had life insurance, I'd be pretty happy at that point. Yeah. Knowing that everything was looked after, so making sure that was fine. But no, I think it's more of from a family aspect. Is I'm very methodical when it comes to it. Just from my investment background, of just understanding that if you see someone twice a year, for example, and they're 80 years old and there's, the average lifespan's 85, maybe they're not in the best health anyway, then you can work out that there's only 10 times. I don't think many people think like that, though, if I'm honest with you. I think that might be just me. It's quite morbid, isn't it, really, to say, yeah, I'm going to see this person 10 more times. So that's just, we need to up those numbers a little bit. But that's sort of how I see things. And I suppose from my life aspect, again, why I moved home was mainly because I was just a workaholic, investing in the markets. I was opening new businesses. I've got 5 businesses, and I just keep on buying into another business and so on and so forth, and then growing that business. But I just realized I had no family time, and I was like, well, if I'm not going to be around, I'm not going to. Then my kids won't know who I am. I won't be spending much time with them. And what would I be? I'll just be a bank account for them in the long run. And I was like, let's make some changes so we can be around the family, see them grow up, be a part of that bonding period through the young years and make that change. So I suppose that's the changes that I made, if that was the case. And I feel like I've done part of that now. And I've also acknowledged the whole family side of, needing to spend more time with the wider family.
Yeah. So see, already you've started to hone in more on that, on what it is that is important for you. So already you started to say, well, okay, so I reached a point in my life in which I needed to stop, and I needed to move to the Isle of Man, and I needed to spend more time with my family because that's what's important to me. And everything around it is periphery. And it supports the goal of my family, and so I'm actually speaking now to you as someone who's pretty good and has thought out the implications of their goals pretty well, which is not very common. So normally I would still be speaking to someone who is, and I have clients that fall into this category. I had a client who had accumulated at the point that I was talking to him in 2008. He'd already accumulated $100 million. He wanted to get to $150 million in order that he might retire and spend more time with his family. So that was the goal. Accumulation of $150 million, retire, spend time with his family. He's surpassed that now multiple times. And this is conversation in 2008. He surpassed that multiple times.
Yeah.
and he still isn't spending time with his family.
Mm.
And it's terrible. It's terrible to see that someone who had a carefully formulated life plan, and his kids have now flown the nest, they've gone.
Yeah.
That's it. That window of opportunity is closed. But what you're doing is far better thought out.
Don't get me wrong. I've definitely struggled with it. Don't get me wrong. I've definitely struggled with it of leaving the UK and making sure that I do it. And I knew it was going to be a struggle mentally to just, that's all I've done for the last 10 years is invest, trade, build businesses, taking that transition. And I still do that, don't get me wrong. And I spend a lot of time working here. But just that whole mindset shift of not being in the office early in the morning, sort of leaving late in the evening, coming home, changing that whole mindset shift of why did I actually start this journey to begin with? What did I want to achieve back then? And although maybe a little bit sad of me at the time, I didn't have someone that I could go to and say, like what you've just said, I didn't have that someone come and say this to me in the beginning of my journey. So what I did was I used to write letters to my future self. And so I would then say, like, when you hit X amount of money that you've achieved, open this letter. And so it was like a journey of like, well done, you've managed to achieve hitting X, Y, Z. If this was the self of you where you was trying to make that, I know what you're like. Probably you don't give yourself a pat on the back and you've actually completely forgotten that this was a goal. So give yourself a pat on the back, so on and so forth. Make sure you have a little celebration about it. And just remember why you started this journey so that you could do X, Y, and Z. And don't forget that initial goal. And then at that stage, then I would then write a new letter of what my next goal was and then put that in the drawer and then wait until I got to that. So that's how I always didn't forget what that initial core reason was for starting that journey.
I absolutely love that. I just love that. And if you don't mind, I'm going to be advising people that they do exactly the same thing.
There we go. Heard it first from me. No, it's just very interesting because I feel that someone like myself, for example, I won't take advice from anybody that I don't believe has either done what I've done or is on the same sort of level playing field of experience. Mm-hmm. So unless I'm talking to someone who's highly qualified or I'm talking to someone who's been there and done that and got the t-shirt, I'm not listening to anybody else, because I feel that sometimes used to initially, when my parents at the time were like, maybe you've been too risky, maybe you're doing this, maybe you're doing that. Well, hang about. You haven't been in this situation before, so you don't understand it. So I don't feel like I used to just cut those opinions out. But the only opinion that I will listen to is myself. My opinion is that. And then when you open that letter, there's no one else that's telling you that. That's you telling you that of where you were back, say, 2 years ago mentally, of what that aspect is. And you do have to digest it and you do have to read it, because you're like, I wonder what I wrote to myself. And when you're breaking that down, you're like, you've lost the way a little bit on this sort of core goal here. What are you doing? And it brings you back into check with what your initial goals were and the reason behind it, to at least give that sort of thought-provoking idea,
Yeah, and it's so easy to change your goals along the way. It's very easy. So actually, writing down a goal and sticking to it is the first very important thing, because people do change their goals on a daily, if not weekly basis. So you think, well, markets are buoyant. My goal is now going to be to achieve 10% per annum. Because so the return from equities is what, 8 or 9, so I can outperform at least 10%, if not 20 or 30. That's what I want to achieve per annum. That's not linked to a goal. That's just a return. It isn't actually a goal. It's a return. Whereas then markets sort of capsize, and all of a sudden people are going, oh well, cash returns are fine. Cash returns are absolutely fine. That's all I need in order to be happy. Again, not linked to a goal. It's just a return. But if you keep in mind what your goal is and what you need to return over that longer term, then you can end up with that sort of over time, that linear return with all the bounces that go on in the middle, and having ignored all the bounces that go on in the middle. That's the sort of the holy grail.
Yeah. I suppose, like, when you're talking about that client that went from 100 to target to 150, I suppose like that for me is sort of like breaking down, well, if you just put that 100 million aside or whatever, and you even had that just 30-day lock-in on interest at the moment, you're doing like 4 million a year just on the interest alone. And it's like, is your life expense really outweighing 4 million a year? I don't know. If it's not, you've got to look at quality of life, haven't you? And go, what are you doing this for? Are you doing this for pure gain, or are you doing it to better your life and enjoy that life at the same time?
Yeah, that's that question of, when's enough? And not knowing the value of what you have to give up in order to achieve more. Yeah. And what you have to give up sometimes is not replaceable. And this is the situation that that this particular person was in. They can't now backtrack and stop working 16-hour days and see their kids grow up. They can't do it. So it's a tough one. I'll ask you the last question, but I'm not going to put you on the spot and actually ask you to answer unless you feel that you want to, because it's quite a deep one, and it does. If anyone has been sort of mentally answering the questions that I've been asking Sam, and as this one you really do need to think about a little bit. So consider this third one. Okay. It's, you go back to the doctor now, and the doctor says that unfortunately he got it wrong. And you've come to the end of your life. And this is not a bucket list type question of what would you do on your last day. It's more of a question about what have you missed? What did you always want to do that you have missed out on and you've never actually got to do? And is there any aspect of regret in things that could have otherwise been that aren't?
Yeah, it's a good question, and it's definitely something that I ask myself a lot, because in fact I was asked that pretty much exact question by the Daily Express probably like a month ago. It's called The Regrets of a Fire Saver, someone who's financially independent, retired early, is what they wanted to categorize me as. I wouldn't say I was retired, but I'd say it's financially independent. I suppose from that aspect, from my point of view, so I'm 32, so I'd say that I'm pretty young in my journey of life, hopefully, fingers crossed, touch wood. But I think from my aspect, I gave up everything for when I started my trading career. So pretty much from the ages of 18, I'd say even younger, it's probably 17, 16 onwards, all I ever did was work. So even when I went to university, I didn't go out, I didn't go partying. So I was a bit more of an introvert. I didn't have that time to go out. And ultimately, actually, did I, if I was to look back now and go with my university peers, or replace drinking to be where I am now, I'd probably say they would. So I don't regret that in that aspect. I missed out on that side of socializing with my university friends. And I didn't take my gap year like everyone else did, and they all went crazy and went traveling. I was running my business at that point. So I was sort of like in strict pathway, 10-year goal, you achieve this, you grow everything. And then I did that. So I suppose my aspect is from that side, and I'm fully aware of it, is that I need to travel more because I haven't experienced as much as what other people would. All right, in a different aspect, because it's now a family aspect. It's not like I'm going out partying in Bali or something along those lines, but spending time with my family, traveling and going to different locations is definitely something that's I'm fully aware of. That I always ask this question, which is so strange that you say it, because I literally just say, if your life was to end tomorrow, what would you regret? What would you miss? And what would you be? Or what would you regret not doing, or that you think that you should have done in order to be happy and fulfilled? Because there's a motivational speaker called Les Brown. I don't know if you know him, but he's he always used to say, imagine yourself on your deathbed and you're surrounded by all those ideas all those creations that you was never brave enough to take and explore and doing it. And they're looking at you angry and saying, why not? Why didn't you follow through with that? And it's something I've always asked myself of, like, you know, if you're really passionate about something, why don't you just give it a shot? Like, the worst case scenario, what is that? How is it going to go? How do I mitigate that risk? And how do I then push forward with my passion? And so I've always sort of asked myself that in that aspect, and especially from my point of view. So I don't mind answering it, but yeah, it was pretty much the whole aspect of, you know, I'm not angry about any business opportunities that I've missed, or any life lessons that I've had and difficulties along the way. I think that's what forms me as a person. But definitely the fact that I was so focused on one aspect of becoming financially free, I missed out on that socializing level of traveling and so on and so forth. And I think that's something that I will now spend the next 10 years making up for.
Yeah, no, it's great because I think that you're quite an unusual example, in that you've been very diligent in the pursuit of your goals, and you've known what your goals are, and actually now you find yourself in a situation in which, I mean, I can tell just by hearing you speak that you're very passionate about what you do. So you've reached that point in your life in which work in itself has become a goal because it interests you, you're passionate, you're driven, you're motivated, but you've also got your family. So you've got a well-rounded sort of life. Essentially, you've got your family, you've got your interests and your career and your passion, and now it's sort of like, well, I don't need to focus on work, because now I need to focus on perhaps traveling a little bit more. But most people aren't in that type of circumstance. You know, for most people, they haven't perhaps thought of it to the same degree as you have, and they haven't therefore formulated a plan to arrive at that. And even though you've got a tension between, yeah, but I want to work more, but I also want to travel more, but I also want to spend more time with my family, you know what you want. And that's the starter. So that's the starter for 6. And then it's, well, how do I get there? You know, how does Sam get to spend more time with his family, but as well, more time traveling, and as well, more time running a business or a group of successful businesses? You know, how does Sam allocate his time? Because it's got 3 resources. One is covered. So you've got your wealth, that's, you know, you've worked hard, you've built that up. You've got talent, that's covered as well. And you've got time, and that's your finite resource. That's the one that you really can't.
How to find more time. Yeah, that's it. That's what I suppose struggles with me mentally when you tell me about the people that are at the 100 million plus stage, or, you know, that's the core thing, is having more time. And it's a real shame, isn't it, that they don't break that or understand that aspect of it, and it's more of accumulating more and more and more. And yeah, it's quite painful to see, I think. And I feel like I'm quite lucky in realizing that at a young age of, okay, you know, like a prime example, the time I realized that, I chartered a jet once, and when I chartered the jet, there was a bigger jet next to me. And I just thought, this is a big goal for me, chartering this jet, you know, and taking that. Who would have ever thought I would ever have this? And then there was a bigger jet next to me. And that for me was the wake up call. And it doesn't matter how big you get, someone's always going to have one bigger. And which level are you going to be satisfied with in order for you just to live your life and have more time, rather than chasing a bigger plane, a bigger house, a bigger this, a bigger that? And that's for me what I realized in that aspect. But yeah, when you're talking about it, so basically what we're saying is, in order to become a successful investor, you need to have a strict plan that you're approaching with professionals around you. That's sort of what we're saying. And I think from my point of view on that, I believe that from a very young age. And I saw it from this, and I don't know if I just learned it myself or I watched something. I can't remember where it came from, but you know, I felt like people just drift through life along a river, and this opportunity comes and they take it, or this next one comes and they take it. Whereas, when you build a house, you create a full blueprint plan of this is where the walls are going, this is the structure of that building, and then you build it. You don't have a guy that turns up and goes, I think we'll have a door there and we'll just start building. That house isn't going to be structurally safe. It's not going to last long and it's going to fall down. So I just sit there and I think, why don't you create a blueprint of what your life should look like and then try to stick to that as strictly as possible? And you'll find ways of making that blueprint as close as you can to being structurally safe and long lasting. And that's sort of something that I've always used that as a saying, because it's like, people laugh at me when they sort of said, why does it matter? What does your house look like? What does your financials look like? How is your day spent? And this is all stuff in the future of how that looks, how I can attain it, and what does that look like? And people are like, that's just so far-fetched to think about. And I was sitting there thinking, well, it's better than just waking up in the morning, plodding along with my day and see sort of what opportunity throws at me the next day. And I've always compared it to a house. You don't complain about having a blueprint to a house because you go, that's going to last me a long time if I'm living in that house,
Absolutely. And this is you are describing perfectly the battle that we have day in, day out in order to convince clients that their initial plan, their initial blueprint was good and that they shouldn't change it because all of a sudden the tide has changed. And that, the blueprint is sound, it's solid, it was the right blueprint. Or to challenge the blueprint, because there are some people. I mean, I don't know if I don't know to what degree our listeners will have considered things like their asset allocation. How much you have in equities versus how much you have in bonds versus how much you're using to trade across currencies versus, I don't know in how much detail that will have been given consideration. But we know that we can formulate plans so that the three aspects that we've been talking about, so your time, your talent, and your wealth, can all be structured towards gearing that overall set of goals that you've set yourself. And part of that is your financial resources. And they need to be structured in order to support that. But there are a lot of people now, for instance, because we've seen quite a lot of turbulence in financial markets over the past 3 years, I would say. I mean, it's been a hard journey for people who, aren't accustomed perhaps to large degrees of volatility. The past 3 years have been tough. And they felt perhaps sometimes like, you were like the world was going to fall off a cliff. And all of a sudden, in that river of uncertainty, there's this magical island that appears, which appears like a tropical paradise, and it's cash, and all of a sudden people are like, happy days, I can get off these turbulent waters, which is, the equity market, and I can put my flag into this island and I'm going to call it home and it's going to be cash. But that's short-termism, isn't it? Because cash at these levels might not last forever. And they certainly probably won't be geared towards supporting your longer term goals. It might be a good place to park yourself temporarily. But by the time you decide to jump back in the river, the water's moved on and you've lost an opportunity potentially. And we know that with our head, but actually telling ourselves with our heart and re-establishing in our heart and, psychologically, that the plan that we have is still good. And I'm going to stick with it. I'm not going to jump into that island and stay there because the island is a desert island at the end of the day.
And that's where you're saying earlier, that's where people lose those percentage points is in their performance. And you have this sort of fear of missing out, don't you? When times are usually completely dire and going badly, it's usually the best time to jump on board and take the long-term investment route. Whereas a lot of people sort of wait until everyone's going, wow, look how much the market's rallying. I want to be in equities. And then next thing you know, they're in far too late. It's interesting that aspect happens as well from a high net wealth position, isn't it? Because, well, I suppose it's a perceived understanding that you would have thought that high net wealth individuals would have known that even more so, I suppose, in investing, that you need to be in the nitty and gritty side of things in the early stages before it sort of takes off.
Yes, but we tend to think that once you've reached that level of wealth, it doesn't really matter to you psychologically. But my experience in dealing with clients that are very high net worth is that there has been an imbalance that has gradually taken place over the course of time. This is a sweeping generalization, and it's by no means true of everyone that I deal with. But I tend to find that quite a lot of the time, wealth, time and talent are served to the pursuit of a goal. And the goal is family or even charitable causes sometimes, and they are driven to serve that goal. But over time, money in itself becomes the master, and people become subservient to the money, and so money in and of itself becomes the goal. And so if you are serving a master instead of being the master to the money, if you know what I mean, if that's changed around, then you are afraid of losing that, because even because it's taken you've put a lot, you've sacrificed a lot in order to build that up. You've put your life at the altar of serving money. The person that we were talking about before is a perfect example of this. If they were to lose a great proportion of those financial assets now, well, think about everything that they've sacrificed. Their children's childhood has gone on that altar. So they can't possibly afford to lose that. And so there has been a shift, and there has been a changeover in who the master is and who is now in charge. And money can sometimes be in charge and be dominant in that relationship, which is a bit scary.
Yeah, no, but it's very true, isn't it? And I suppose that's actually a really good way of explaining of why people do that at that level of wealth. And they sort of, in that aspect of that, I suppose, at least in my opinion, then, so if I lose everything, at least I've spent my time with my son. I can't actually, I can't say I sacrificed that aspect of it. No, that's very interesting. Okay, well, it's been amazing. I'm trying to think, is there anything else that we need to cover? We've gone through the plan of how they can achieve it, having the professionals around you. Is there anything else that you think we need to add?
I'd potentially delve slightly further into the need for having professionals around you. And by that I mean people such as yourselves, or the people that are attending your courses as well. Because there's one bias that perhaps I see crop up more than any other bias, and that's the illusion of control. So that's when you think that because you're an expert at one subject, you can control it. So say, for example, that someone is an expert in currencies, and so they think, well, currencies is probably a bad example because of the degree of volatility that they have. But let's go with it anyway. So you think that you're an expert in currencies, and therefore you have gradually built up over a number of years, a set of successful trades that have made you a lot of money. And so you think, well, I'm in control of this situation, and I'm going to keep on being successful. A better example potentially is someone who is an expert in property and who's built up a property portfolio, and they think, well, I really know the property market. This is what I understand. I understand bricks and mortar. I can touch it and I can feel it, and therefore I'm going to put all my money in the bricks and mortar. But first, you're making a set of mistakes. So first, you're thinking you can do this all by yourself in isolation, and that you don't need anyone else around you to support you. I mean, this is in itself slightly crazy, because you wouldn't go to the dentist, and you wouldn't not go to the dentist if you were a dentist and have and pull your own tooth out, right?
Yeah.
You just wouldn't do it. A friend of mine who's a doctor was telling me that how she selects her doctors, and I was quite intrigued. I was thinking, well, you're a GP, you could self-diagnose and sort of write your own prescriptions, but no, she goes to the doctor. GPs go to the doctor. Who knew that? And it's the same for us, in our own field, in our own areas of expertise. We need other professionals around us, be they currency experts, be they tax advisors, be they wealth planners that can help, give you a vision of your financial future. A whole host of people we need to support those plans in order to make them successful. And also, we need to forget the idea that we are in control, because we really aren't. With the housing market, this is why the housing market was a better example, perhaps, because that a change in interest rates can have a profound effect on the value of your property portfolio. And that a change of political regime, which you absolutely can't envisage, will have a profound effect on that. So actually, plowing everything that you own into a single asset class is potentially one of the biggest mistakes that anyone can make in order to undermine their own wealth plan. And normally that is driven because of that illusion of control, illusion of, I know this industry, therefore that's what I'm going to invest in. And I hear it time after time after time. So do build your world up with those other professionals that can assist you along the way and that can stop you from making fundamental mistakes.
No, it makes complete sense. And having the right people, I suppose, around you to be able to be in that position to provide that as well. So I suppose, Ned Private Wealth been a prime example of that. But it's, it's very, very useful information. I think that a lot of people, even I would say even myself, I'm quite equity driven and started to divide. I diverse a lot through other businesses and business investments rather than, I suppose, from bricks and mortars and hands off investments into sort of, bonds and cash and property. In that aspect, I would go down the route of buying into different sector businesses and having that exposure. But no, it's definitely something that I should probably address a bit more and review that portfolio as well, I suppose, and look at it from a more of a broader aspect to protect myself in those cases we ever get someone else like a Liz Truss or something that collapses the pound in a matter of months or something, and it really throws the toys out the pram for everybody, I think, especially in the currency world. Really defend against those. Like you're saying, definitely been very turbulent over the last 3 years. So having the right professionals around you to be able to make those informed decisions is very worthwhile having.
Definitely.
I think we've covered everything. I think it's been amazing having you. I think the audience will be able to take away so much from this. And I think just in summary, I suppose from everybody listening, you've kind of got given a plan of what to do, how to sort of evaluate what you're looking at from a life aspect point of view. Definitely adding sort of like that blueprint. Hopefully it'd be interesting if anybody gets in the comments and actually says that they've taken away and they start writing themselves letters now. I mean, I never thought that would come out of this podcast, that people start writing to their future self. Maybe it won't just be me that does that now. Might be some other people that do that and start, keeping yourself on track with your planning. But the other aspect I found quite interesting was you called it time, talent, and wealth. The sort of like the three aspects of looking at how to attain more time, how to attain more talent, and how to sort of attain more wealth. And I think those 3 points are very key to sort of growing yourself successfully, I would say, in all aspects, really. If you can attain more time, attain more wealth, and attain more talent, then I think you're on a good trajectory for success as well. So I think that's another aspect there on what it takes to be a successful investor, and having the right team around you as well.
Yeah, and I perhaps ending with a slightly more upbeat example of someone that did manage to, or is still managing to combine those three successfully. We quite often deal with philanthropists, and there's one gentleman that we've dealt with for many years who talks about those three aspects, and that's who I got those three words
right.
from. So this is all real life scenarios that we're talking about. But he's now in his sort of mid to late 80s, and he said that all the philanthropic good that he's done over many decades, which has been just gobsmacking, to be perfectly frank, has been because he was just having fun. So he was talking about his life in terms of, I don't want to wait till I'm dead and then leave a legacy to the causes that are close to my heart. I don't want to do that. I want to see the look on people's faces when they receive the benefit from that. I want to be the one that gets to enjoy that aspect of my life. And so he's a serial inventor. I think that he's got about 200 patents under his name or something like that. And he's made the lives of a lot of people better through both his creativity and through his philanthropic giving. But he's done all of that in pursuit of fun, and I absolutely love that.
That is amazing, and that's something that I want to start doing a lot more of. I definitely want to start doing a lot more of it. Definitely like to meet that guy for a coffee as well.
Yeah, maybe I can put you in touch.
Yeah, amazing. Well, it's been awesome having you, Rebecca. Thank you so much for your time, and I hope everybody on the podcast can take away some useful tips from you.
Thank you very much, Sam. It's been an absolute pleasure. Thank you.